Hello and welcome everyone. Today I will share some of my ideas about a weakness in Bitcoin with you. Next slide, please. As Chris mentioned, in 2013, I wrote a book and predicted that the largest economic crisis of the history will start in 2020. The book was titled 2020 New Economy, Great Crisis, Wonderful Opportunity. You might think that, hey, how did you predict coronavirus 7 years ago? Because the crisis today is a result of COVID-19. But no, today the 2020 crisis is not caused by the pandemic. In fact, the basic reason for this crisis is a huge credit bubble. To prove this, we can check the 1918-1920 Spanish flu pandemic. It was a much worse pandemic in which 50 million people lost their lives, while the same quarantine and lockdown measures were active. Production was generally stopped, but there was no significant financial crisis. We remember 1907 banking crisis, we remember 1929 Great Depression, but we don't have any significant economic crisis during 1918 Spanish flu pandemic. Because during that pandemic, companies were not loaded up with debt, but they had savings, a lot of savings for bad days. But the situation today is very different. So 7 years ago, I didn't predict a global pandemic, but I predicted that this credit bubble would burst. In my 2013 book, there was also an entire section about Bitcoin. In that part, I wrote that investing in Bitcoin could pay huge profits, but also Bitcoin could face a bad fate like Napster did. I warned that sovereign states could take action against Bitcoin. Next slide, please. Fortunately, up to now, generally, countries haven't banned the largest cryptocurrency. In this map, you can see the green areas are the countries that have no ban against Bitcoin or cryptocurrencies. The red countries, which are very small in number today, are the countries that completely banned Bitcoin. The yellow countries have some kind of harsh restrictions against Bitcoin, and the purple ones have some kind of restrictions, but generally okay with Bitcoin. But a fundamental issue which I will bring today to you about Bitcoin could trigger global cryptocurrency bans. Next slide, please. The first Bitcoin transaction was made in 2009. In the past 11 years, Bitcoin and blockchain technology have still not been comprehensively understood by the general public. Moreover, the level of education doesn't have any impact on this matter. Sophisticated analysts of an international banking giant like Goldman Sachs can still think in 2020 that cryptocurrencies are not a new asset class. People haven't comprehended the role of Bitcoin in social relations yet either. As capitalism ages, it has pushed the social sciences into the background, especially in the last 100 years. Today in schools, social sciences have been classified as a field to be studied by children with low intelligence, actually. So there's a serious misconception today that money is a matter of mathematics or technology. Thus, everyone who deals with monetary issues rush into technical analysis or some graphics and lose their minds in between price or indicator lines. That's why some people say, actually many people say, technology is important, not Bitcoin. However, money is primarily a social issue. The opinion, belief, and acceptance of the society about what is money actually comes first. Can we move to the next slide, please? As everyone focuses heavily on technology, strange questions arise for Bitcoin, like what will happen if someone seizes 51% of Bitcoin computing power or hash rate? What if they change the 21 million supply limit? What if a quantum computer breaks Bitcoin? Or what if the NSA has put a backdoor in the SHA-256 algorithm? Or shortly, in a nutshell, what if someone brings Bitcoin and its technology down for a while? Next slide, please. Why Bitcoin is precious? Bitcoin is just a software. What makes it precious is that the Bitcoin community believes in the software, adopts its limited supply and sound money principles, and they ultimately accept Bitcoin as money. Without these, Bitcoin would still be a useless experimental program running on just several computers. Next slide, please. Here, the importance of blockchain or distributed ledger technologies is, for the first time in history, the technology has introduced a method that enables a community to reflect its will about money to the world. Even if this technology can be rendered inoperable for a short period by various methods, still the important thing is the will of the community. In every scenario where technology might be interrupted, actually the Bitcoin community has the opportunity to always run a new chain of Bitcoin, including old records, thanks to the open source technology. There were also people within the Bitcoin community who didn't understand the importance of the will of the community. The most obvious example is Bitcoin Cash experiment. Roger Ver and his supporters tried to impose an opinion on the community with individual will and some money, but the community rejected it. While importance of the will of the community in Bitcoin has not been adequately understood, the relationship of Bitcoin with global community hasn't been considered important yet either. Moreover, those who care less about the will of all of the societies of the world or the global community are the most fanatical Bitcoin fans or hardline maximalists. Next slide, please. Some of the Bitcoin maximalists believe that Bitcoin would essentially replace all the other currencies in the world, and for that achievement, its price should constantly increase at terrible speeds. They call it hyperbitcoinization. However, Bitcoin can exist only if it serves societies of the world. Bitcoin must serve the global community or the global economy by providing an inflation-resistant reserve money option so that the Bitcoin community itself could benefit from this function. So the Bitcoin should be useful ultimately for the whole world. Next slide, please. Bitcoin's enemies keep dreaming that Bitcoin price at some point will go to zero. But Bitcoin is a kind of digital commodity. There is a certain cost for producing a Bitcoin, and this production cost acts as some kind of a floor for the price. Here, in this slide, you can see a price model for Bitcoin created by Data. This model calculates cost of production for Bitcoin considering both capital expenditure and operational expenditures. So this blue line is the cost of Bitcoin production, and as you can see, the orange line is the price of Bitcoin. As you can see, the blue line acts as a floor for the Bitcoin price. As long as the Bitcoin community demands Bitcoin, its price will never drop to zero. In a continuously digitalized world, where the central banks are printing unlimited money, a digital cryptocurrency with limited supply, a very strong network effect, and brand advantage will always be in demand, actually. However, there may be huge fluctuations in the price as the market is still very new and narrow. Next slide, please. The real danger for Bitcoin is not going to zero. Contrary, Bitcoin price could rise so quickly and drift into a volatility that it would disrupt the global economy. It is not the same thing for Bitcoin dropping from $20,000 to $3,000 when compared to falling from $10 million to $3 million. For example, if we take Bitcoin supply as 17 million Bitcoins at a price level of $20,000, the market cap of Bitcoin will be $340 billion. When it drops to $3,000, the market cap would fall by $289 billion, which is not a significant amount for the global economy. But if Bitcoin rapidly increases to $10 million and then suddenly drops to $3 million, the market cap will melt down by a whopping $119 trillion. Today, the entire world's economy, all the goods and services produced all over the world in a single year, is $80 trillion. Consider that. If Bitcoin climbs to $1 million prices, it could broadly enter into the portfolios of big hedge funds or banks, etc. It could turn into a high-volume trading asset in dangerously leveraged derivatives markets. So such a market cap loss of over $100 trillion could also trigger a huge meltdown of portfolios of these companies, investment funds, or banks. And this would cause a disaster for the world economy. Next slide, please. And eventually, this kind of financial disaster with epic proportions could trigger sovereign states to take legal action against not only Bitcoin, but most probably also against all the independent cryptocurrencies all over the world. For this reason, global hyperbitcoinization advocate hardline maximalists should be careful about what they wish for. We should question what can be done against such possibilities that will disrupt Bitcoin's relations with world societies or the global economy, global community, instead of repeating the same shilling expressions on Twitter. Why do these extremely rapid increases and collapses occur in the first place? Can a countermeasure be taken against this? If the answer is yes, then what can be done? At this point in the history of cryptocurrencies, these are the questions that need answers. Fortunately, Bitcoin price increases seem to get stabilized in time. In 2010-11 cycle, Bitcoin price jumped by 600 times. This staggering rate fell to 130 times in 2011-13 cycle and to 23 times in 2013-14 cycle, and finally to 20 times in 2017-18 cycle. Bitcoin has proven for 11 years that it will not drop to zero and disappear regardless of technological disturbance possibilities, although the majority still doesn't understand this point is clear. The fact that majority doesn't grasp the situation is not actually bad thing for Bitcoin community. Many people are still in baseless fears about Bitcoin, but this will only increase profit potential for the brave ones that adopted Bitcoin earlier. This is said just for people like Goldman Sachs analysts and those who listen to them. The danger for Bitcoin is not to be misunderstood or going to zero, but rising extremely fast. Thank you very much for your time and interest.
Ready. Erkan, thank you very, very much for that presentation. I think it's very, very important for people to educate themselves on what these assets are, especially Bitcoin, and how it works, instead of jumping into something that you just don't know too much about. So my question to you is two quick questions. First one, if I'm outside the Bitcoin space, I'm Chris's mother, and I'm thinking, I've got some cash, I need to figure out what to do here. Of course, she can come to me and ask me, but let's say her son is not me. What should she do? And obviously, it's not go on to Coinbase and grab a few Bitcoins and put them somewhere. But like, how should she take the steps? How should retail investors that are new to the space, what are the first steps?
First of all, if they are interested in cryptocurrencies, they should learn what are these technologies and what are these cryptocurrencies. They should read the history of these new financial assets. And as you mentioned, they should be knowing, they should know what they are going into. Going to a exchange and trying to buy Bitcoin is maybe a step after a month of excessive research. Then maybe you should also learn technical analysis, how to trade if you want to trade, or if you want to be a long-term investor, then you should learn about these price cycles, which I mentioned in my presentation, because those price cycles could be devastating for you if you are entering the market in the wrong time. There were, I guess, 4 big price cycles in Bitcoin, which also have a great impact on the other cryptocurrencies. In these 4 cycles, after the peaks, Bitcoin lost some 80 to 90% of its value. That means if you enter during a peak, you will lose 90% of your portfolio, and it's very hard to endure such a disaster on your side. So be careful.